What is going on, everyone? Back with another ExxonMobil stock review. It's your man, Why Me. Thanks for tuning in. Today is February the 19th. As we look at the weekly chart, we can see that we're back into a bullish, possibly bullish area where there is price action and not much rejection. Now, every level that we've accumulated to, there has been price rejection for the last couple of weeks. Okay, so keep that in mind. You see rejection here, you see rejection here, you see rejection here, here. Okay, which means that this is an area of accumulation where they make you think that they're going to take it up, which they could always do at any time. Don't get me wrong. You can always take it up. However, they make you think that they'll take it up from this level, but they don't. So this level to me is a line in the sand. Okay? If we go down to the daily chart, and hopefully my chart acts correctly and my internet seems like it wants, okay, good, perfect. So now I'm going to go slow too as far as clicking and moving around here. We go down to the daily chart, you can see the setup, the 1-3 setup that all of the stratas love. It created a 2 down scenario, but that could have been a sell-off for the shorts. Because what happened on the next day? What happened today? This is today's candle. We took it from lower than 165 to 103. We landed on 103.73 by the time the market closed. Now, if you think that there are people doing this, pushing the buttons, retail traders, etc., doing this, you are wrong. Think about it like that. Like, there's no way that the stock rejects, supports, gaps, etc., at the same prices. This is not a human thing. So any new trader, anybody getting into the stock market, and everybody says it's rigged and all of that, it's not rigged, but it's very formulaic, and the things that happen are by design. So if you want to call that type of thing rigged, I don't know what to say, but it's very calculated. Everything moves very calculated, and you have to be on the right side of the trade at all times. You have to be on the right side of the price action. You have to know how to read it, and you have to know what you're looking at. What we strategists like to look at is definitely that 1-3 setup. Now, full disclaimer, have I traded this perfectly? No, I have not. It's a lot of chop here, and you can easily get faked out when you see the stock at this level, 103.73. But look what happens in the post market. We drop a shade below it. So my theory is, if we're going to take this up again into the 104, 105 area, what we need is a clean break through this 103.73 level. Like, no questions asked. Like, when it sees this level, there has to be zero rejection whatsoever. I mean, like, the cleanest break ever. Because otherwise, it's just going to come back and build more capital, more liquidity. That's my thought process. And could I be wrong? Hell yeah. I would love to be wrong, and I would love for somebody to be in this trade from a level that I talked about and absolutely kill it. But have I traded this correctly? No, not really. I traded this area correctly. I traded this 1-3 setup correctly. But I didn't trade this inside bar correctly, or this area here. So right now I'm actually waiting for it to clear 103.73, and then I'll either find a rejection off of one of these levels that are higher, or try to go higher with it. So that's my theory right now for this particular stock. It is now in a series of momentum candles. The 2 down, 2 up reversal, the 1-3 setup, as you can see. However, all of these setups, well, the 1-3 setup technically failed, but it retraced. It reclaimed 102.40 and almost reclaimed 103.73. But again, almost for 103.73 is not good enough. I need this stock to go superfluous, whatever the word is. I need this stock to go leaps and bounds beyond 103.73 in order for me to consider it fully bullish. And again, it can come back to 103.73 to test for more liquidity. Now, the investors that are here at this level, they are new investors. I don't see anybody carrying this stock from $120, and seeing them riding this stock all the way back down to low 90s, low 100s. I don't see anybody buying at that level and carrying this stock out and letting it come retrace back here. I don't see anybody buying below 100 and not selling or offloading, a majority of their shares or a majority of their position at that level. So that created a huge sell-off. Just that level altogether. The algorithm sold it off as well as the investors, and a lot of people wrote it up. So now you see this 1-3 setup at the bottom of my screen here, right by the Trading View logo. Let's move it up a little bit. That took us up to 104.88 from below $95. That basically took us $10, just give or take. So now you can see the next setup. It's obviously not as indecisive as this one. It has a lot of volume, which to me, the 1-3 setups where it has a lot of volume in it, you never know which way those will go. Like, I like to see the 1 hammer and then the 3, be a 2 up personally. Like, so I like to see the 1, or I like to see the 3, and then the 1 is a hammer, and then the next bar essentially would be a 2 up. Since this 3 came after the 1, it would make you think, since this level is higher, that we're going up again, but it faked you out. It failed. It failed that setup. And then only for the next day for it to come back up. So now what you would think is, and especially if you bought time, hopefully not weeklies. But if you bought weeklies, let's say 102, you're back in the money. But if you bought weeklies like 104 or something like that, you might be getting smoked. So the 1-3 setup failed because it created a 2 down. Or did it fail? Did you know that it would create a 2 down? I wouldn't assume that it would create a 2 down after the 1-3. So with that being said, it reclaimed. Now we're back at a key level again, 103.73. If you go back to my last video, I said this level at the end of my video like 4 times, just because I know that this level is a key level for this stock to either build off of or reject from. And I believe that we are bullish after 103.73, especially if tomorrow we open and there's some type of wick to the bottom, like wick forming as a support level at 103.73. That can create a hammer, and that can create a bullish pattern that brings us over, 104.88 into the 105, 106 area. Now, if anyone's holding those contracts for this week, I will roll those into next week, because you never know with this stock. Anybody holding 104 and up weeklies for expiration of tomorrow or today, whenever you hear this video, February the 16th, roll them joints into next week. You can still get money, don't get me wrong. And even if you get a nice pop, even if you get a nice little profit, little bag, take that bag, roll these contracts in the next week or the week after, into March even, March 15th. All right, so with that said, again, we're looking at the daily chart. What I'm also going to show you is how the momentum played out today. It played out very nicely and executed very nicely on the 15-minute chart. So as I scroll back into this rather slowly, you can see forming support from yesterday's session and last week's session, the 9th, obviously you can see, forming support here, $100.65, rejecting 102.40, support 165, rejecting 102.40, support 165, another test or, you know, formulation at the weekly open, which was $100.60. On to another test now. What's significant about this 102.40 level is that you can see sort of the 1-3 setup here, the inside bar at $100.40, and that momentum bar a little bit over the level. So it's sort of a 1-3 setup on a smaller time frame. But what tipped it off was the testing of these fair value gaps here and the entrance into these fair value gaps once it got over the fair value gap, creating a level of support into the next key level. And so now what's significant as well, just like I said, and I'm actually freestyling this. I didn't really look at the smaller time frames. I actually work better on the larger time frames and on the higher time frames. But since my computer is so slow acting right now, I do want to show you this on a smaller time frame. So again, 103.73, you can see this is the level. Give or take, you know, $1 or a few 20 cents, 25 cents. That's the level, 103.73. You can see where this ended, 103.93, where the run ended. And again, we're back. 103.42 is a test. Back up to, and again, testing one. Now, my theory, and obviously my sentiment for oil is always bullish, but I have to look at this from a logical standpoint. What the strat is, you have to analyze or believe what you know to be true, or you have to trade what you know to be true. Speak on what you know to be true. That's your bias. Your bias is what you know to be true, what you see on the charts. If you see a rejection from this level all the time, you have to play it as a rejection until something else, you know, happens from this level. So if you see rejection at this level, then the chances are the algorithm is going to continue to reject at this level and not go long from this level, because once it does, it creates an order flow that's very bullish, and then market makers may not be ready to pay out that sum of money. As you can see, February the 8th, which was last week, Thursday, same execution, the same scenario. We ran bullish from 165 into 103.73, and 103.73 rejected us. Back down to 103.65. So my thing is about this level is that it has to clear it, or to me, we're not bullish. As I scroll back, and I scroll back very slowly, we can find this level again. January the 30th, 103.73. As I scroll back again, find this level again. I believe it exists one more time, but I may be wrong, because this is where and I definitely know it exists again. This is where we had that first run up from the good news and the price target upgrade. So let me go back a little bit more. There we go. Stop. But you saw it. As my screen scrolled by, you saw it. Scroll back, sir. Sir, ma'am, whoever you are. You see the rejection. And it's not quite 103.73, but it's rejecting that area. And so what that says about this level, and this goes back to January the 4th, to January 3rd. So what that says about this level, this is a major level on a smaller time frame, on a higher time frame. 103.73 is a major level, and that is where we are now. That's where the day closed, at 103.73. I'm just picking random times. Look, October 27th, 103.73. Look at all this price action and chop here and indecision. This is where the algorithm is targeting. You can see it. I'm just saying 103.73 is a major level. You can see all of this price rejection here. Boom, boom, boom. This is 2023. This is November. This is going back months now. You can see the action. So if we reclaim 103.73, you can see that the sentiment is either bullish or bearish at this level. They're going to have to change the level, because if people watching this video start figuring this out, they're going to have to change the level. They're going to have to reprogram the algorithm. 103.73 is the level, everybody. So we'll see what happens. We'll see how the stock plays off of this level again tomorrow when we open. Monday, February the 19th is a holiday. So the market will be closed. So you can expect a lot of people to take profits. You can expect to see higher highs become lower lows. You can expect that. You can expect certain stocks to run like SMCI, Nvidia. They don't care. You can expect those stocks to go crazy as usual. Or you can expect a healthy pullback for a higher run as well. But as you can see, this red line, as I'm scrolling across my screen, you can see all the attraction to this level. You can see the gap ups, the wicks, the support, the momentum going all the way back. This is June now. I'm back in June. So the point that I'm trying to make is this level 103.73 is very significant for this stock. And if we flip it, the next level is 105.99, or the next range, 103.73 to 105.99. That's the next range. And then beyond that, we'll talk about that and cross that bridge when we get to it. So as I flip back to the daily chart and recalibrate this chart here, give me 2 seconds. You do see a lot of indicators that I have, but this is where we are attempting to get back to from where we return. 112.61. And so 112.61, 109.15, those are levels that we don't see until the old investors come back and bring us back some of that paper. But right now, 103.73 is a level to be discussed, to be determined. You can even see from here that it goes up from that level. It goes up from that level. It goes down from that level. It goes up from that level. So let's go. Let's get it. We came back to an area now where the price action, can give us an upside, or it can give us a trade, period. So now if you're, no bias, bullish or bearish, you will see this level as an area of interest, because a 2 down can form from here. We can go back inside as well and form a 1, or we can go 2 up from here, which I don't think so. Not right now. I just see all this price rejection, and I see all of this as another measure of building accumulation. This was a very aggressive trend to take us back to 103.73. And honestly, you have to do it before the week is out, before this weekly candle closes. You have to do it. Next week is a short trading week. So in order to take the stock higher, you have to continue to build liquidity, but you have to do it aggressively to make people, because this stock was like sleep. You got to make people think that, this stock has something going on, whether it's some news, the lawsuits and that little simple stuff that people don't really care about. Once that news drops, then that's a catalyst, and it gives the algorithm a chance to, capitalize on that. And it makes it look like, hey, we got a price target upgrade. Let's run. Until economic data comes, FOMC, CPI. And so economic data comes, and then you have another, an adverse condition, a rejection off of the bullish trend or the bullish level that, we picked up on. So again, think about it like that. The algorithm is very busy. You see the rejection. You see the wicks at the top. It wants to build liquidity off of your mistakes. All of our mistakes. It built liquidity off of my damn mistakes and the $100 that I gave back. So give me back my money, but I'm not going to revenge trade it. I'm still going to play it, how I'm supposed to play it. So I'm about to call it a video, call it a day. The market, again, is open tomorrow and not on Monday. So let's go. Let's get your money. Let's find some trades. Will I be executing any trades on Exxon? No, I will not. I'm just giving you the analysis so you can see it. I do have underlying stocks and I'm building on my position. So I love these little small rejections and I continue to build on my position here. And like we discussed during the earnings call, this stock has the potential to go higher because they plan on doing things to increase the revenue. They're saying that the revenue is going to double by 2025. So we're building these positions out for years to come, for 1 year or 2 years. These are buy and hold situations. I do talk from a standpoint of trading options because I'm traditionally an options trader, but the buy and hold strategy has been my bread and butter. Obviously, options is something that I'm kind of new to, but like I talk about analysis and stuff like that from an options trading standpoint, from like a fast moving standpoint, because that's how I learn to analyze the stocks. Just from like by looking at these charts and options contracts. So the way I analyze stocks is I analyze the underlying chart as well as a put chart within the range and a call chart. So I look at all three charts together, and it helps. Not only does it help me determine a bias for the day, it also helps me play both sides of the trade and find key levels in both scenarios, bearish and bullish. So I use the options charts to analyze that, and I use that in my Webull trading platform. So again, 103.73, we found ourselves back here for the 600 millionth time since as far as I can go back to June. Obviously I can go back further, but 103.73, we found ourselves here again. What are we going to do from this level is to be determined. No rejection wicks at the top of the candle. Significant, yes, but don't get faked out, because you can obviously see that has happened multiple times at this level. Look at these levels. Look at this level, but look at the candlestick patterns. You can see inside candles. You can see rejection wicks. You can see us taking it back up, but only to go so far. Now, again, this is a weekly time frame, so don't get twisted like this is happening every 15 minutes. These candles are taking weeks to play out. So, once you get up to a certain level as far as in the body of the candle, there's rejection and you see the following wick to follow it. So I'm thinking on a level of where it's still maybe building liquidity. For example, like, yeah, okay, we hit 103.73, but you can see this is a down candle. This is a 2 down, blew through the level. This is a 2 up. And then you can see this candlestick hammering and forming a support. That's what I was talking about earlier. Forming a support at the level. A candlestick pattern, which is on a hammer or a 1 or 2 or even a 3, forming a support at that level. Now you see the rejections at this level, we go down. Indecision, rejection. Forming support at the level. This candle here. The week of August the 7th. Forming support to take us up. Now, so the next candle, ideally, what you want to see is a candle with a wick to the bottom forming support at this level. If you see a candle at this level with a wick to the top or a larger wick to the top, this is still a weekly candle, so this candle is still in play. We have less than 24 hours left on this candle, as you can see from the chart over here. So this weekly candle was still in play, and if there's any rejection to the top, a wick to the top of this candle, I don't see it going higher or obviously forming a support. Now, if I jump back down to the daily, pray for me, wicks to the top. Okay? Now, if I jump back down to the daily, wicks to the top, wick to the top, wick to the top, All these wicks over here to the top. Support, and then we reject it. But you can see what happens when there's support at that level. This is technically a 2 down, but you can see the support. Support. So think about it from that perspective. 103.73. You know what time it is. If we wick to the top, that to me is going to reject. If we form a wick to the bottom on a daily, this is the daily, so there'll be a new candle tomorrow. A wick to the bottom on this daily chart. Support. We may go higher into the 104 range. Where are we? 104.88. So we'll say that'll be the top of the range for tomorrow. Excuse me, the top, not the top of the range. That'll be the range for tomorrow. 103.73 to 104. That should be the level that the wick, the support, and the volume test. At least like a whole dollar. We should see some type of action on a daily candle again. The candle should move us $1 to take us further into. But what I think is before the day before a holiday, the trading day before a holiday, I don't know if we go up. So let's see. Neither bullish nor bearish at this point. That is my bias. This has been a 26-minute video, so hopefully you got some value from it. Hit that like button, share, subscribe, comment, leave a comment, please. I love comments. I always answer them joints. All right. It's your man, Why Me, 103.73. Y'all know what time it is. All right. Don't fall. Let's go.